Hello, folks. Welcome to Pro Trader Strategies. My name is Eric Wilkinson, and this is Spotting the Trade. I want to get you folks what you need to know before you roll, and that's going to be talking about the economic data, how that impacts the overall markets, maybe sprinkle in some geopolitical fodder to round off that market analysis, and then talk about some strategies that we could implement into our portfolio based on those assumptions we come up with. All right, so without further ado, let's get on with the economic data. Across the pond, remember, we've got Davos going on, Switzerland, all the geopolitical heads are talking. So we're getting if you aren't getting your fill of geopolitical fodder this week, then I don't know what to tell you. There is a lot of information coming out around geopolitical thinking, their feelings with the economy. Is transitory inflation here to stay? Well, it seems like it's not as transitory as what we were originally believing, and that the Fed probably is a little bit behind the curve is what the general consensus is across the board. We are seeing these Fed governors speak and try to defend their position, in a sense, being very hawkish, but yet very weary of a slowing economy there. So with that said, in the United States, we've got a couple of things going on here. It's a bank holiday in Europe, so it's going to be a little bit slower here in the United States with smaller volumes coming across the board. But with that said, we had initial jobless claims coming in lower than expected, 210,000, expected to be 217. So that's one of those data points we've been seeing start to ratchet up here with inflation, some of the monies from the government probably drying up for some folks. All of those things probably getting some people out into the job force. We were seeing this number start to ratchet up, just downticked a little bit. That's good for the overall economy because it signals that we're employing folks and that we're not losing jobs. We're actually gaining more jobs than we're losing there. All right. And the preliminary GDP, yeah, it's up a little bit higher, 8.1, expected to be 8%. So continuing to see inflation not ebb, or seeing inflation not be transitory here in the markets. With that said, let's get on with the overall market, see what's going on here, and see if there's any opportunities. Right now, I'm a little bit leery of what's happening with market action. So we'll talk about that as we go along. 111 in crude oil, not really going anywhere. Everybody's spending $5 a gallon for gas. Now, one of the things that really is going to be something to hyper focus on here, folks, going forward as you are trading. If crude oil stays elevated at these levels, let me just pull out crude oil trade back up here, or chart. If crude oil continues to go higher, right, we know that that influences our gas prices. Going into the summer, gas prices tend to ratchet up a little bit because it's a different blend. All right, so with all of those things said, if we have from a couple of years ago going from paying $30, maybe $40 to fill up your tank to now $70, $80 to fill up that gas tank, that $40 that you are now putting into your car is not being spent at Starbucks, at Home Depot, at all these other big brick and mortar, Amazon. You know, there's other places, Starbucks, Dutch Bros. All of those names are going to start coming down to reality here because folks are going to start realizing, well, these guys aren't getting the spending that they were getting before on, let's just say, impulse buys. Okay. Restaurants aren't getting the same impulse buys as in getting maybe an appetizer, a dessert, an extra drink. Those things are going to be coming out of the economy because just like we've been talking about with home prices and the rising interest rates and how you can only afford so much of that home, to pay off the principal, because now the balance of it is going to pay off the interest, right? It's very similar in the situation where if you're putting a lot of money into your gas tank, you have to drive somewhere. You have to get out and about. Well, if you're filling up that tank, you are not able to spend that money going to Starbucks, going and buying an impulse buy off of the end cap, okay? So that will have a tendency to really slow the economy. That's going to influence a lot of different stocks. Those are the ones we're going to need to keep an eye on, especially things like Starbucks, where those are things that we can make at home, but we'd rather go out for. So I think that that's something that could struggle a little bit. Also, we're seeing higher coffee prices due to some arid what am I thinking? A drought in South America. Jeez, hard words today. Anyway, bonds finally starting to relent here. We know that the bonds cannot continue to move higher here. It is more of a flight to safety, at least right now, because the Fed is raising interest rates. It's just going to be a very difficult uphill battle if that's what you're trying to do right now. I think that we got to let this play out before you start getting involved. Gold futures, after a few days of rallying here, we're starting to see a little bit of weakness. Dollar's been strengthening. Some folks are calling that the weakness here in gold. I think a lot of people are putting money on the sidelines right now is what is really feeling like. I thought it was going to be something where people felt like they needed to put money to work because of the inflationary aspect. If you have money sitting in cash, it's actually losing money to you because it can't keep up with inflation that way. Well, I was expecting more people to pile into gold as a store of value, get that upside move. But it's really starting to see, the more I'm listening to folks talk, is that people are putting money on the sidelines, meaning they are parking it in cash. Dollar strengthening, that's good. So that's a little bit offsetting of the inflation there. But for the most part, we're looking at people parking cash, which isn't going to help support the market, really. With that said, VIX has been coming off the last few days because we've gotten a rally off of this bottoming pattern that we talked about. We got the confirmation. I said that I wasn't going to jump in until we break the lower low, lower high thing. So we have not broken this lower high just yet. So that's where we're going to be looking for. What is that? 32,600 to 32,700. Yeah, let's say a 32,700 settlement is where we need to be in order to break this pattern, at least in the Dow Jones Industrial Average. NASDAQ, we need to get up and break the pattern by trading above, let's call it at 12,600, just to get above that line in the sand. That's where we need a settlement. That's where we need to close out above that level. That will start signaling we've broken this pattern. Again, in the E-mini S&Ps, we need to get up a little bit higher even yet. Let's call it 4,100 in the E-mini S&Ps to break the pattern. Now, I have this on the 3-year chart because when we look at a pullback from all-time highs, it looks a little bit different, doesn't it? If we look at this, that looks like an opportunity, a bound to come off of this Fibonacci. We bounced off of it. Looks like we're starting to rebound back to 4,150, let's call it. So we got to break this pattern, settling at above 4,100 to resume back towards the point of control here. That said, we haven't done that yet. We're still working through this lower area. I don't think that this first influx of cash right now is the big buy. I think it's more of people starting to kind of piece in. So I'm going to wait for these patterns to break before I start getting really involved. Now, you guys know that I've been selling some puts and stuff like that. Those trades, like in Yum, those are trades that I've been trying to be diligent with. So if I want to add something to my portfolio, yeah, I'm going to start selling some puts right here at this level, but I'm not going to be doing it like I would normally do when I make a decision to go out and buy a stock in normal times. Right now, I'm thinking decent levels, long-term investment horizon. Those are things that I need to do dollar cost averaging with on scaling into these. And that's what I'm going to be trying to do over the next few weeks, is starting to scale in to names that I like by selling puts. If I don't get it put to me, then I'll be happy to just take that cash, right? I mean, I'll take a dividend on a stock that I'd actually want to own in my portfolio, but not have to take the risk. Well, those are the things that I'm going to be interested in trying to play around with in the next couple of weeks. So I'll show you how to do that in these videos. So make sure you guys are subscribing with the little bell. The bell is what tells you when I pop in and announce. And videos on Thursdays afternoon. Doing those 7 o'clock Eastern. So check that out as well. Those are where I really drill down on different option components. Today, we're going to be doing it on the risk reversal, short risk reversal. And I'll show you why people call it the risk reversal, why this is such a popular strategy with institutional traders, right? You need probably something like this in your portfolio, especially at times like this, or at least know about this strategy so that you can hedge a portfolio in times like this. All right, so we'll go over all the rules around how to build this strategy today at pro trader strategies. Check it out. All right. So if you can't take that, take it easy.